Look closer. Everyone's chasing headlines. ETH ETFs, Solana meme coins, BlackRock whispers. Meanwhile, Stellar is doing what it always does, building in silence. And to the untrained eye, that looks boring. But to those watching closely, it's textbook stealth phase behavior. Because while price has stalled, the fundamentals haven't. They've accelerated. Quiet partnerships, regulatory engagements, tech upgrades that didn't make headlines, but will redefine how financial networks operate when the lights come on. Here's what most retail traders are missing. Soroban smart contracts aren't just live. They're already powering enterprise use cases. Eon isn't just a wallet. It's the gateway for institutional compliance. And XLM isn't just a token anymore. It's the infrastructure asset behind a regulatory-grade financial layer. This isn't about price pumps. It's about protocol positioning. And Stellar is moving into place while 99% of the market is distracted by noise. Right now, Stellar's network activity isn't exploding yet, but it's rising under the surface, with stablecoin flows climbing and new contracts being deployed quietly on Soroban by forward-looking projects. Translation: we're in the calm before the market catches up. When it does, XLM won't move gradually. It never has. It re-rates violently. And when it does, you'll either already be in position or on the wrong side of the trade. This is why the silence is dangerous, because it fools you into thinking nothing's happening when everything's actually being set up. So don't watch the noise. Watch the infrastructure. And remember, when systems get upgraded quietly, they usually get repriced suddenly. Let's cut through the noise. While the rest of the market's been chasing hype cycles, debating whether another Solana meme coin will go 100x, Stellar has been doing something far more dangerous: rebuilding the rails of financial infrastructure without telling the crowd. And that's what makes it lethal to ignore. Because when protocols scream for attention, it's usually for one reason. They need the hype to survive. But Stellar? It doesn't chase headlines. It doesn't bait retail. It doesn't drop NFTs or throw liquidity at yield farms. Instead, it's quietly embedding itself into the bones of the next financial system. Let's talk smart contracts. Soroban is live. While Ethereum's still bogged down with $50 gas fees and Solana's still explaining why their chain went offline for the fourth time, Stellar launched Soroban, a smart contract platform purpose-built for one thing: institutional-grade automation. And they didn't hype it. They just built it. More on that in the next section. But remember this: Stellar didn't just add smart contracts. It added a regulated financial logic layer on top of its already bulletproof transaction network. Meanwhile, the MoneyGram remittance ramps have scaled like wildfire. You can now walk into a MoneyGram branch in over 180 countries, hand over cash, and have it turned into USDC on Stellar in seconds. No bank, no rate, no nonsense, and you can just as easily cash out fiat in, fiat out. That's not DeFi. That's not retail speculation. That's real-world infrastructure for global money movement. This is exactly what crypto was supposed to do, and Stellar actually did it. Now zoom out to the global stage. The Stellar Development Foundation isn't just posting blogs anymore. They're sitting at IMF roundtables, they're contributing to Bank of International Settlements white papers, and they're testifying in U.S. Congress about how blockchain can transform public and private sector finance. That's not noise, that's strategic positioning at the highest level. And the kicker? They're doing it while remaining a decentralized, open protocol. No VC chokehold, no layer of middlemen, just pure infrastructure designed for the long game. But here's where it gets serious. Stellar is no longer just a fast and cheap blockchain. It's morphing into a full-stack financial operating system, not for degens, not for hype, for compliant DeFi, for real businesses, for regulated institutions that want blockchain functionality without the chaos. They're not trying to be the next Ethereum. They're building something Ethereum can't be: a financial-grade public chain that works within the system while still remaining decentralized. And that's not marketing fluff. That's directly from their own protocol updates. Here's the proof. Enter Eon, Stellar's institutional smart wallet. This isn't MetaMask 2.0. This is something Wall Street and central banks can actually use. Full regulatory compliance baked in. Tokenized asset management. permissioned controls, multi-sig vaults, direct support for smart contract logic via Soroban. You don't build a tool like Eon to issue JPGs. You build it to issue tokenized treasuries, stablecoins, cross-border settlement assets, and commercial paper. And you don't roll out a wallet like that unless institutions are already asking for it. So let's ask the obvious question. Why build it now? Why launch these tools right now when the market is asleep? Simple. Because Stellar is prepping for crypto's second wave. Not the retail wave, not the meme phase, but the regulated institutional wave, and they know it's coming. Just look around. MiCA is rolling out in the EU. US regulatory frameworks are forming. Countries are trialing CBDCs and stablecoin integration. And banks are desperately trying to figure out how to survive the transition. Stellar isn't trying to fight that. They're building the rails to serve it. So here's the warning. If you're watching price alone, you'll miss it. Because this isn't a hype-driven move. This is a foundational shift. The kind that redefines what a blockchain network is and who it's for. And that's exactly what Stellar's building right now, quietly. Without hype, without headlines, without FOMO tweets. But when it's done, the crowd will wake up, and by then, XLM will already be repriced. Because when the infrastructure is ready and the institutions flip the switch, they're not going to buy your bags, they're going to move liquidity through them. This is your early signal. Don't sleep on the silence. Let me know when you want the next section expanded in the same tone. Soroban's smart contract shockwave. Why this changes everything. Let's talk Soroban. For years, XLM had one weakness: no native smart contracts. That made it powerful for payments but limited for decentralized apps. Ethereum took the crown. Solana came in with speed. But Stellar? It waited and built slowly. Now, Soroban is live on mainnet. And it's not just another DeFi sandbox. It's a compliance-first smart contract platform designed for real business logic, not just casino apps. Let's break that down. 1. Security first. Soroban is built on Rust, a memory-safe language used by giants like Stripe and Dropbox that drastically reduces the chances of exploits, unlike Solidity, which has caused millions in losses on Ethereum. 2. On-chain governance meets regulatory alignment. This isn't about DAOs voting on meme burns. Soroban enables programmatic compliance. Think AML/KYC flows built into smart contracts. That makes it attractive to regulated entities. 3. Cross-chain operability via Stellar Core. Because it runs alongside Stellar's main network, Soroban smart contracts can interact with the $XLM ledger in real time, sending stablecoins, issuing assets, managing liquidity, all while staying compliant. But here's the shocker. Stellar didn't build this for Degans. They built it for banks, payment processors, remittance corridors, and governments. Projects already launching on Soroban include Palago, a DeFi for trade finance protocol issuing real-world invoices on-chain. Beans, microlending in Latin America. Greek, issuing crypto debit cards and digital identity. These aren't meme plays. They're infrastructure. And as Soroban grows, demand for network usage grows. As that grows, demand for XLM grows. Because XLM powers fees, liquidity bridges, asset issuance, and more. So what happens next? The market re-rates Stellar, not as a slow payment chain, but as an institutional smart contract platform built for the next financial system. Institutional access, Eon, and the real use case explosion. Let's talk about real-world adoption. Right now, 3 major things are happening in parallel. 1. Eon Wallet and Soroban integration. Eon isn't a MetaMask clone. It's a compliance-first wallet built for enterprises. That means full integration with multi-sig setups, permissioned access controls, on-chain audit logs, Soroban smart contract functions. This is a wallet for banks, credit unions, and money service businesses, not just traders. It allows them to tokenize fiat, issue stablecoins, and handle regulated transactions on-chain. 2. USDC ramp expansion. Stellar is one of the few chains Circle has deeply integrated with USDC. That means billions in cross-border flows can now settle near instantly using XLM rails. MoneyGram's integration with Stellar allows users to convert cash to USDC and back in 180 countries. No credit card, no bank account, just an ID. That's how Stellar is quietly banking the unbanked, but in a way that's attractive to regulators. 3. Tokenization of assets. Stellar's architecture makes it easy to issue tokenized stocks, bonds, CBDCs, and treasuries. Sorbonne now allows these tokens to behave with business logic like time locks, revenue sharing, and dynamic pricing. Imagine, a bank issues tokenized bonds via Sorbonne. Dion holds those tokens in compliant custody. MoneyGram handles fiat conversion, all powered by XLM liquidity. This is happening in stages right now. But once a few major institutions adopt it, the demand for XLM explodes, because it's not just a gas token. It's the underlying fuel for this entire ecosystem. And here's what most investors don't realize. Stellar is being positioned as a neutral, decentralized infrastructure layer that can serve entire governments. They've already partnered with Ukraine on digital hryvnia trials. They've met with the European Commission. They've advised the UNHCR on blockchain-based aid delivery. This is not hype. This is real. So what happens next? Simple. Once regulations clarify globally, and they're close, XLM becomes one of the only compliant smart contract platforms ready to scale with government, enterprise, and institutional money. Here's the part every investor wants to know. What happens to XLM's price? Let's start with the fundamentals. Supply is capped at 50 billion. Current circulating supply is just under 28 billion. Transaction fees are negligible, but fee demand rises with utility. Stellar Development Foundation, SDF, still holds a war chest of XLM, but they've become increasingly conservative in how it's distributed. Now here's what's happening on-chain. Whale activity is picking up. In the last 90 days, several wallets have accumulated over 10 million XLM each. Dormant wallets from 2017 to 2019 are waking up. On-chain activity via Sorbonne has begun to gradually increase, meaning early builders are deploying. This suggests a preparatory phase, the phase where insiders are building and accumulating while the market sleeps. Historically, XLM moves violently after long periods of sideways action. Example, from May 2020 to November 2020, price hovered under 10 cents. By May 2021, XLM hit 73 cents, an over 600% move. Right now, we're in a similar range, and Sorbonne wasn't even live during that previous rally. This time, we have a smart contract platform with real enterprise utility, an on/off-ramp network covering 180-plus countries, a wallet infrastructure made for institutions, real regulatory alignment. That's a cocktail for repricing. So what happens next? XLM's next rally won't just be hype-based. It'll be driven by real demand. And that kind of move doesn't just spike and fall, it sustains. If the stars align, meaning regulation clears, institutions step in, and Sorbonne adoption spikes, XLM could be on a multi-year revaluation curve. We're not here to throw out a crazy $10 price tag, but even a return to previous highs, 0.70 plus dollars, followed by a breakout into utility-based territory, $1 to $2, is very possible. And remember, Stellar is targeting the $10 trillion global remittance and trade finance markets. Even a 0.1% capture rate of that volume equals billions in XLM liquidity. What happens next and why you must stay laser-focused. If you're holding XLM, this is your moment of clarity. The market might seem quiet, but beneath the surface, smart contracts are live. Institutional ramps are live. Regulatory alignment is tightening. Real-world projects are launching. You're not holding a hype coin. You're holding the key to a global financial infrastructure rebuild, designed to be fast, compliant, scalable, decentralized. But timing matters, because once the narrative flips, once the market realizes what Stellar has built, it won't wait for you to catch up. It will move without warning. And at that point, you're either already positioned or already priced out. So stay alert, stay informed, and most of all, don't fall asleep while the next financial internet is being built right